Over the past 7 days, the real shift in Web3 finance wasn't price, it was structure. Bitcoin 2026 just wrapped up, but the real story wasn't the event itself. Regulation, institutions, payments, and on-chain assets all started moving together. In the next 2 minutes, I'll connect the 7 signals that actually matter. First layer, narrative. Bitcoin 2026 in Las Vegas looked like a conference on the surface, but with the SEC and CFTC on the same stage discussing institutional adoption and regulation, the signal was clear. For experienced players, this wasn't hype, it was positioning. Bitcoin is moving further onto the policy and institutional table. Second layer, watch the risk. Kelp DAO was hit for nearly $293 million through the Layer 0 bridge, triggering bad debt across protocols like Aave, collateral gaps in RSETH, bridge pauses, and roughly $13 billion wiped from DeFi TVL in a week. This wasn't just one project failing, it was a stress test for cross-chain and res-taking systems. The market isn't only repricing yield, it's repricing security. But the real signal wasn't the hack, it was the response. Aave and DeFi United proposed a rescue plan to release around 30,000 ETH into a recovery fund, with over $200 million in protocol commitments and direct donations already lined up. Multiple protocols are coordinating to restore the RSETH system. This shows DeFi is evolving from a fragile system into a reparable one, with early signs of collective immunity. Fourth layer, Asian adoption. K-Bank working with Ripple on cross-border remittance is more about banking and payment infrastructure than another crypto-native story. Given K-Bank's connection to the Upbit ecosystem, the signal is that Asian institutions are testing on-chain settlement that can actually enter banking systems. Fifth layer, watch real adoption. Western Union announced a USD stablecoin, USDPT, and a stable card on Solana for cross-border settlement, along with a digital asset network. With stablecoin market cap above $320 billion and monthly volume over $1 trillion, this is no longer just an exchange tool. It is starting to compete with traditional cross-border payment rails. Sixth layer, watch the regulatory signal. Israel approved its first local fiat-backed stablecoin, BALS, while Ripple and K-Bank are testing blockchain-based cross-border remittance. This matters because stablecoins are moving from crypto-native markets into national financial and banking systems. The key point isn't just another token, it's the opening of regulated rails. Final layer, the long-term thesis. RWA and tokenized treasuries are still growing, with Solana's RWA market reaching around $2.5 billion. Looking back, the signals were already there. Stablecoins solve payments, RWA solves assets, and ETFs solve access. Put them together, and Web3 finance is shifting from a trading narrative to an asset narrative. So the real takeaway this week is this: the edge doesn't belong to whoever reads news faster. It belongs to whoever can connect news, on-chain data, and capital flows into structure. That's why we built this AI tool, to extract signal from information and turn market noise into actionable judgment. The next cycle won't belong to news scrollers. It will belong to tool users.